So this presents a problem, structural problem we need to think about. Politicians have some trouble making this transition. You heard of this guy, right? You know, I'm amused. Every time I put a picture of Trump up, the audience laughs. I laugh too. It just amazes me. But I want you to hear what he says about forcing Apple Computer to build their computers in America. This is what he said.
We're going to get Apple to start building their damn computers and things in this country instead of in other countries.
So, he said we're going to get Apple to build their computers in the United States. Now, he said this because he said this is going to create jobs, manufacturing jobs. But there's a problem. Today, Foxconn, who is the major partner for Apple in making the iPhones and these components in China, they are replacing 6,000 humans a week today with robots. So if Apple was to come back to bring their manufacturing to the US, they're not going to put people building iPhones, they're going to put robots building iPhones. So the only jobs it's going to create maybe is robot repairmen. So this is a problem structurally we need to think about. So let me talk about the design of financial services in this new world. And I'm going to start with a story about rocket science. We say banking isn't rocket science, but we can learn from rocket science. So this is, of course, the V2 rocket, which was the weapon of mass destruction in World War II. But at the end of World War II, as it was clear the Germans were losing, the Americans were rushing to capture the top scientists from this German weapons research program. 1,500 engineers and scientists that they were trying to capture and bring them to the United States. And at the very top of this list of people was this man, this scientist. His name is Wernher von Braun. Maybe you've heard of him. Wernher von Braun went on to be the father of the US rocket program, and he was instrumental in building the Saturn V rocket. Now, at the time of the Saturn V, every launch was costing about $1.2 billion. And it cost on average about $6,000 per kilogram to get a kilogram of stuff into orbit with this program. Now, over the preceding, or the next 50, 60 years, we only got the price of that down by maybe 50, 60%. And along comes Elon Musk, and in just 10 years with SpaceX, he was able to reduce the cost to orbit now down to around $300 per kilogram. So this is a 90% reduction from the days of Saturn or the Space Shuttle program. And they can land these rockets back on these landing pads at sea after they go into orbit. So the reusability is key. But the key lesson from this is Elon Musk and SpaceX didn't start with the Saturn V design and iterate on it. They didn't start with the Space Shuttle design and improve on it. They started from scratch. This is a design principle or design philosophy we call first principles design. So that is, if we're going to build a rocket today and we didn't know how to build rockets in the past, how would we do it? What materials would we use? What technology would we use? Let's start from scratch. Let's go back to the first principles. And this is what Elon Musk did. And the result is a massive cost reduction and a massive shift in the way we think about this industry. Now, when you look at other products we've seen in the past, one example is the smartphone. This is another example of first principles design. Because at the time that the iPhone was launched, the most popular phones in the world was the Motorola StarTAC and the Nokia banana phone, as we used to call it, right? The 9110. And so if you were to look at the usual trajectory, we would have iterated, improved on those designs. But Steve Jobs, he started from scratch. He took a telephone, a browser, and an MP3 player, music player, and combined this into a device with a touchscreen that was very different. So this is first principles in product design. But for banking, we don't do first principles. Everything we do is based on the bank branch, and we iterate on that over and over again. So when the internet came along, what we did is we said, let's take the application form that you have in the branch and stick it on a web page. So we have the same product, we just take the form and put it on the web. And then when the iPhone came along or the Samsung came along, we said, let's take the credit card and put it inside the phone. So we just iterate on the old models or the old designs. We don't start from scratch. We don't do any first principles. We do design by analogy. So this is one of the problems with us making big leaps in terms of innovation in financial services. We're not making those big leaps because it's incremental change. This is going to have to change. Now, we get into this rut of this design problem of thinking that the branch is the model for banking and everything else. And in insurance, it's the agent. So we try and replicate those processes but introduce it into technology. So Jack Ma, who's the founder of Alibaba, when he was talking about competing with financial services and retail giants like Walmart, this is how he described the way he would compete. I'll let you listen to him.
You know, you do a great job and blah, blah, blah. So I said, maybe in 10 years we'll be bigger than Walmart. He said, young man, you have a good hope. So we said, make a bet. I think in 10 years we'll be bigger than Walmart on the sales. Because if you want to have 10,000 new customers, you have to build a new warehouse and this, that. For me, 2 servers.
Now, this is how a fintech thinks about banking. When a fintech thinks about acquiring 10,000 or 1 million customers, they think about, how do I get you to use your smartphone? How many servers do I need? They don't think about, how many people do I need in a building to get you to sign a piece of paper? They don't think like that. And this is the design challenge that the banks have today, making this transition to this different style of thinking, not iterating on the branch, not saying, well, we must have a signature because that's always the way we've done it. So we have to change that thinking. Now, in China, we've already seen dramatic changes in this respect. Now, a quarter of all deposits are done on mobile phones in China. That's 25% of all deposits in banks are done through mobile. And Alipay started this off. They had this Yuebao, a deposit product. They raised $90 billion in deposits in just 8 months on this one savings product. Now, no bank branch in the world has ever done that, but the mobile phone did. So we have to re-examine our thinking on this. We used to think that the bank branch was where customers made deposits. But it turns out the mobile phone is much better at doing that, much more efficient. Now, you can't deposit physical cash, but you can make deposits electronically. So we've tried to redesign the bank branch to make it more relevant. But the problem is not a design problem. It's not about having nice colors in the branch or iPads or coffee machines or a nice sofa to sit on. The reason people aren't visiting bank branches today, and I just heard, someone told me last night at dinner, Citibank is reducing the number of branches in Korea by 70%, is that right? 90%. Yeah, 80, 90%. It's still a lot, right? But we've seen this happen in the UK. You know, since 1990, the United Kingdom has seen 1 branch close every day in the UK. In the United States, we're seeing a decline of branches in the United States year on year, about 3% of branches every year right now, and that's speeding up. Now, the reason branches are closing is because of this. We don't need to go to the bank branch anymore. Now, when you talk about redesigning the branch to try and get customers back in the branch, it's not a design problem. It's a behavior problem. You have to get them to stop using the phone to come back to the branch, and that's not going to happen. So this is the challenge. So what we're starting to see now is we're starting to see banking embedded in people's lives. Uber is a good example. When they try to recruit drivers, they can open a bank account for a driver in the Uber app. And when they kicked this off, when they designed this, immediately, within 3 months, Uber became one of the largest acquirers of small business bank accounts in the United States. But Uber's not a bank. Uber doesn't want to be a bank. But they tried to solve the problem of getting their drivers a bank account. Now, when we look at other parts of the world where we see big changes in financial services, one of the big messages is around financial inclusion, helping people get access to banking. And in the world today, we have about 2 billion people who've never had a traditional bank account, 2.5 billion people. But in the continent of Africa, if you look at these unbanked people in sub-Saharan Africa, what you realize is a bank branch is never going to be able to give them access to banking. The same in India. In Africa, 70% of people who are unbanked today would have to spend 1 month's salary to physically get to a bank branch because of the cost of transport. 1 month's salary to open a bank account. This doesn't seem like a viable proposition. But almost all of them now have a mobile phone. So if you can open a bank account on a mobile phone, then you avoid this problem of financial exclusion by design. And this is the big shift we're seeing in Africa. In fact, Kenya today leads the world as one of the most advanced economies around mobile payments. Almost 100% of the Kenyan population can send money instantly from their phone to another phone. You can't do that in the United States. In the US, you have to still write a check. Right? This is crazy. I joked about this when I went to the White House, and I said this to them over breakfast at the White House. I said, Kenya is a more advanced payments economy than the United States. This sort of blew their mind, But now there's already 19 countries in Africa, or globally rather, that have more mobile money accounts with people having a bank account in their phone than they have got through a bank branch. Now, I want you to think about what that means. In countries like China now, where more people have a WeChat account or an Alipay account on their phone than a bank account on their phone, in 10 years' time, what do people around the world call their bank? They don't think of a bank as a building. They think of this as the bank. Now, when this thinking changes globally, when we start thinking of our bank in our phone, then what value does the building have for banking? It doesn't have the value it has had in the past, not at all. Now, we already see over $1.5 trillion in deposits through these alternative financial service players globally. This is mobile money, robo-advisors, neo-banks and challenger banks. You can see the illustration there of the smartwatch app for Moven, our internet-only bank in New York. And what this means is we're now starting to see the emergence of some very big fintech companies that are starting to emerge. One of those is Ant Financial, Alipay's parent company. Today, they're worth 3 times what Deutsche Bank is worth. But let me explain a little bit further. China this year, they're going to do $3 trillion in mobile payments in China. Last year in the United States, they did $9 billion. So US is not even close to China when it comes to mobile payments. Not even remotely close. So China is aggressively moving towards this mobile-based banking system. And Ant Financial is the largest player in this, not just in China, but in the world. We often talk about Uber being a very big company worth $60 billion or $64 billion. But based on their last financing round, Ant Financial is worth at least that much. during Singles Day, which is Alibaba's cyber shopping day in China, in one day they did $17 billion in transactions. That's more than twice what the US economy did in an entire year. This is pretty big stuff. At the peak, Ant Financial, or Alipay, is handling almost 100,000 transactions per second. That's almost 10 times what the Visa network handles globally. So they're one of the biggest financial service, they're certainly the biggest payments company, mobile payments company in the world today. Now, when we look at regulation and the changes happening in markets like Korea, what we learn is that artificial intelligence is going to be key. Because as this transactional activity speeds up, we now have too many transactions for a human to be able to monitor this. We must have artificial intelligence to regulate the market. And this moves us away from process and policy, compliance process and policy, to being regulation built into computer software, computer code. This is how regulators will have to be structured.